Let's look at April Mix Max. I'm not going to work all the way through it, just the unique things of April Mix Max. You're gonna start to see that this case will become more and more of a puzzle as it grows. So we have a balance sheet, beginning and ending balances for the beginning of April, but not so for the end. But if we know this is 120,000, then hopefully you recognize this would have to be 120,000 as well. That leaves one unknown totaling 120, and you should solve for the allowance for doubtful accounts to be $2,000. Also, on the income statement, there are several items unknown. If you haven't thought through this, you should stop the video and give your chance to see if you can solve for it on your own. And if you have, then just stay put and let's go through this. You end up going backwards, don't you? So watt minus 12,000 equals 18. You should solve for income before taxes to be $30,000. And then operating in, watt minus 433 gives us 33,000. This is going to be 30,433. And 45 minus watt gives you 39,433. This ends up being 14,567. And then, what to expenses will total up to that, $2,600 for bad debt expense. Okay, so now that we know that, then we would move on, and you would have, let me stop this for just a second. So I'm just going to look at pieces of this. One I want to look at, you would have had sales revenue, 77,000, cost of goods sold, and bad debt expense. Well, the first thing we're going to record is the sales revenue. And so we know that that's going to go into accounts receivable. And if you're concerned that you would have read in the narrative, some of that was cash and some of that was credit sales, I'll address that in just a minute. So once we know that, normally we have been solving for cash collected at this point. However, now we know there are two things that cause accounts receivable to go down. One is, so of the 77,000, a company may either write those off, so we may have write-offs, and then the other one is we will collect it. So if we have $77,000 sold on account, either we're going to collect it or we don't, and if we don't, we write it off. So we have two unknowns. We're stuck. We can't go any farther with this. So that's why, instead of moving to cost of goods sold, the next thing you want to record is the bad debt expense. Bad debt expense is going to cause the allowance account to go up. All right, so we debit bad debt expense, credit the allowance account. Once I know that, I can solve for the debits to the account. The debits had to have been $600, right? I add these two together. So that's $600. Well, what reduces the allowance account? Well, write-offs. The allowance account goes up for the estimated bad debt expense, so it goes up for estimates, and it will go down for actual bad accounts. So now we know the write-offs are $600, and I can put that journal entry in the accounts receivable. So we have a debit to the allowance account, credit to the write-offs. And now we can solve for our cash collected. Cash collected, make this all balance, is going to be $60,400. So we go to our cash account, we have the $60,400 coming in, cash collected from customers. Okay, now you may have noticed that in the narrative, I'm going to give myself another cash account. Let's see if I can do that in black. And I want to show you how we could get the same solution. In the narrative, it tells us of the 77,000, 12,000 of that was in cash. So we could have done this, cash of 12,000. So I'm just going to do a little what if right here. Let's go back to our accounts receivable, $16,000 change. So of the 77,000, if 12,000 was cash, then that would leave 65,000 then would have been on account. So we have two debits, 12 and 65, totaling the credit of 77. And then we would have come back up here. We would have been stuck, right? Two unknowns. We would have done the 2,600, got the 600. Let's go put that 600 over here. So the debit the allowance, credit accounts receivable, and then we would have solve for, what would we get this to balance? So figuring all that out, I'm going to do that real quick on my calculator. And we'll get 48,400 would have been the cash collected. So I might just say that's A, the cash collected, A, 48,400. Either way, I'm getting a total of 60,400 coming into my cash account as cash collected from customers. Okay, 60,400 or 60,400. So this is just showing you what it might have looked like if I had actually separated out cash and credit. It really just doesn't matter if you do or not, if you don't, because either way you're still going to get the same cash, right? The same amount of cash is going to be collected from customers, so it has to work out. Okay, now the other thing is this operating expense. That's going to change. What are we ready for? Number 4. Operating expense now is going to be more. There's going to be more in this bucket if you want to think of operating expense as just a bucket for a wide variety of expenses. So of the 11,967, now we're going to see, instead of a separate account for rent expense, some of this is going to go to prepaid. Some of that pertains to rent. So rent expense is now going into this operating expense account. So if that happens, we're going to reduce our prepaid rent like we've been doing. Remember, it always caused this account to go down 500. Also, depreciation expense is now moving into this bucket, if you want to call it a bucket, of operating expenses. So then we're going to take, just like we've taken depreciation expense against accumulated depreciation, we'll continue to do that for the 675. And then the rest of it is for services, just like it's been in the past. It's been services for wages and utilities. That's the accounts payable service account. And so then we'll just plug, what do we need to balance here? 11,967 minus that, I'll get 10,792. So now we're going to see operating expense. What's changing now is that in addition to wages and utilities, all the services, that is going to include rent and depreciation. So I'll go ahead and post this for you. We're going to have a 500 here, 675 for this account, and now 10,792 for this account. Okay. All right. So I've gone through really anything that was unique. I've listed that out there. And I will post this solution in doc sharing so that you can actually see it in more detail. But here's what your final solution for your April Mix Max will look like. So you'll be able to check your work that way. One thing I want to point out, notice the allowance account. That is also, that's a contra asset, but it's a contra current asset. So that change of 2,000, notice it's going to go down here in this reconciliation down below.